What's up? Welcome back to the channel. Today we're going to be talking about a trade that I took on the NASDAQ. So we took a trade on the NQ today, super nice longs for 107 points. We are going to break down what model I'm trading currently, how I created it, how you can find this at home, and how it could probably better interpret like data on the sub time frames, right? So a lot of this is focused for my 1 minute through 3 minute audience. This is applicable to the 5 and 15. However, you will find less instances of it. This is a high frequency trading model where you can take the manipulation leg of the day. So super fast delivery, and you're in and out before 10 o'clock usually. You know how 10 o'clock goes, we either start the reversal or the continuation. This allows you to get some type of low hanging fruit coming into the morning, and then you can just be off. For me, I trade only from 9:30 to about 10:15 because I work every single day. When there are days where there are more higher time frame contexts, I will stay through 10:30, but for the most part, I like to be out and not engaged post 10:30 every single day. So let's break down what we saw this morning and kind of how I was interpreting price. So maybe you guys can find this setup at home. Right. So first things first, we were a little bit ranged out from the overnight session. We had a huge new week opening gap. Trump announced the tariffs back on China on Friday, so we had a really, really big bearish leg. But I wasn't too zoomed in on what was happening on the 1 hour time frame. I really was just paying attention to how the 15-minute was giving me some context. We had the 7 o'clock delivery take out the true open at 12 a.m. right here, marked in this blue. It was all up. And then on top of that, we were able to engage in price straight up in the morning. So what is this Lebron model that I'm talking about? The Lebron model, if you guys watch any of the 2025 ICT mentorship, is all to do with the first presented fair value gap, okay? You can use this on the 1 minute, the 2 minute, or the 3 minute. Through all of my back testing though, I've been finding the most consistency with the 2 and the 1. So I usually try to gravitate towards that a little more. And today what I did is I used the 2 minute, and it's very, very simple. Listen closely. So market came down, we opened at 24,814 or whatever, right in this level right here. And then we completely sold off into the 7 o'clock low, and we printed a bullish SMT. ES did not take out this low, and it started trailing up a little bit higher. So I'm giving myself context. This trade and this model requires context, okay? One, we overnight completely boosted back up into the range. I'm anticipating that we want to take out London because London has a low hanging fruit high, and we printed this bullish SMT. So we come out, we print this SMT, and I'm auto default looking for two things. The market only can go two ways. The first presented fair value gap to respect and maybe trail all the way down into the new week opening gap for a short setup, or we go long. Well, how do you know if you're going to go long or you're going to go short? Well, we need to read the price action that is at this first presented fair value gap. So if you get confirmations, you need to anticipate that that confirmation is correct. So we have a bullish SMT. We have a bearish first presented fair value gap. So my first thing is not looking for longs. I actually have to respect that this PD array of the first presented fair value gap is bearish, right? So I'm not long here, I'm not long here, and I'm waiting and I'm waiting. I want to see a strong bullish signature that we're closing higher, okay? If I can see that, I am more interested in taking a low risk long than maybe having an extended stop loss all the way above this high to take it down to the new week opening gap. Plus, we have that bullish SMT. So I'm already thinking that since we took out this low on NQ, this is our market maker buy model setup starting already. And What I'm doing here is I'm just reading the first presented fair value gap. So at 942, we had that strong closure above that high. And after that, we are dipping back into this first presented fair value gap. And that's actually where I'm starting to get long or interested in these longs, as long as we continue to respect this inversion. So I'm using a strong PD array, the first presented fair value gap. I'm noticing that it's bearish. Okay. I would like to see price invert that and use it as an inversion first presented fair value gap, an even stronger PD array. It's one of the first fair value gaps that are created in your session. So it's important, right? The 1 minute fair value gap was all the way up here, and we can talk about that as well. And as you can see, if we label this as well, price is absolutely supporting that as soon as we start closing above higher. It just happened to be that we had a lower first presented fair value gap on the 2 minute. So I'm going to take that because it's closer to where a good stop loss would be. As you can see, though, I am going to tape read this trade on the 1 minute and on the 2 minute. I have no problem looking at either or. It just looked like the 2 minute was way cleaner today, so I decided to engage with that PD array in specific. So this is that leg of price that is expanding over the first presented 2 minute fair value gap. So I'm just going to mark that out with a Fibonacci right here. And as you can see too, once we print out this high, we retrace to about 50%. And we're also respecting the consequent approachment of that first presented fair value gap. So as soon as we're dipping down to here, I'm already really convinced that we're going to go long, and I'm going to take that position a little bit lower on size. So I started with 3 contracts today. And today I was really focusing on having an accurate stop loss for the type of trade that I'm taking. I want to take a 300-point stop loss trade and go for a 2-to-1 here. And we fortunately got the trade to play out all the way through with little to no drawdown at all. And we were able to take out this low-hanging fruit high for about 107 points. Okay, so this is the Lebron model. Again, you can use it on the 1, 2, 3, 4, 5, 15-minute time frame. It does not matter what you're using this on, as long as you're lining up all of these market maker values, right? You don't want to take a long if we don't print out this SMT or get that inversion. We could have very well just tomahawked or mohawked this first presented fair value gap and then completely sold off, right? And that'll give you some context. If we're selling off from this first presented fair value gap, maybe I wasn't able to catch the short here, right? But if we create another SIBI, I'm kind of focused on the draw of liquidity being lower, and I have targets on the downside as well to take advantage of that price run moving lower. So it's a super fast trading style. It's not for everybody, but it is for me. So this is something that I've been repping since the last video that I've made, and I'm starting to see my model kind of bear fruit. I was able to get a bunch of payouts this year, about $8,000, $7,000 in trading payouts. And I'm really just looking to take this into 2026 and completely take over the game with it and be ready to trade the spring bearish sessions and just kind of run away with it. But again, this is how that goes. And for my 5 and 15-minute traders, the cool thing about this is you can use the Lebron model for a precision entry. But if you ever need help on let's just say, like, if you ever need help on the higher time frame conviction, moving this a little bit higher or further, we are able to sweep this out and we print a CISD, a bullish CISD. I'm looking for a 5-minute closure above that 15-minute CISD to actually see price move higher. And as you can see here at 9:45, we were able to do that. In this candle in particular, we are also doing the reversal as well, coming back into that first presented fair value gap. So for my 5-minute traders out there, that's how I kind of use this. I cycle between the 1 and the 5-minute. Once I see my 1-minute model starting to confirm, I want to see 5-minute context also confirm this idea, and then proceed to move us into my anticipated target. If you guys have any questions for that, I do have a Discord. I will be dropping that in the link, the description below. So definitely check out the Discord. We do stuff like this all the time where new traders are trying to find something new about themselves, and we really have a setup for everything. If you want to do a 15 or a 5, it's more of a day trading setup. If you want to hop in the high frequency spots like me, I'm all over the 1 and 2 minute. I've got thousands of examples collected in my MacBook and my desktop at home where it's just this exact same thing. Longs have been something in 2025 that I've been trying to develop for myself because I'm more of a short trader. But to see stuff like this happen definitely compiles a little bit more conviction for myself going into the rest of the week. And we do the same thing every single day. This is what it's about. Making sure that we're outlining everything and gaining context before we're just putting money behind an idea. and making sure that the risk is straight as well. Another thing that I do like to pair with this is just like all of my macros. As you guys know, we have a 950 macro. I'm anticipating right at 950 some type of expansion. So we're actually confirming the ATM model right at 950. We're pushing below, and then as you can see, we're respecting this price as well. We also create a BISI at the start of the 950 macro where we trade back into and then get the rest of the delivery going into the 9 o'clock high. If you guys have any questions, like I said, please reach out, ask. I'd be more than happy to help you guys out. And we're on a way to pass this funded account. We're going to be doing a funded account challenge. So I'm going to do a couple episodes on this until this gets passed up. We're at $700 or $640 for today's first win. And then I'll see you guys tomorrow. Appreciate you.